Happy Friday. Happy Friday. It is Friday, January the 28th. I'm your girl, your host for Mortgage Money with Shirley. I'm Shirley Nichols. And welcome to my podcast. It is 2022. We're off with a bang. And I tell you, the mortgage business, the real estate business, it is moving, y'all. It is moving. And I want to talk to you today a little bit about interest rates. Yes, interest rates. And a little bit about taxes and what we're doing when it's time to file your 1040s. So again, please tune in today. And if you happen to miss today's live broadcast, again, we are live right here in the Morris Media Studios here in Los Angeles. Please, if you missed the replay, if you missed the live, catch my replay and subscribe to my YouTube channel, Shirley Nichols, and catch the replay on my Facebook page here under my personal Shirley Nichols or on my business page, Clear Sky Mortgage and Realty. Again, I'm your host, Shirley Nichols, and my brand new power-packed episodes for the 2022 with the podcast Mortgage Money with Shirley. So let's talk about it. You all ready? Invite some friends, invite some people that you work with, your neighbors, your relatives, invite them on over to the show. And you might hear this little ringing going on right now. It's my phone, sorry. It'll stop in a minute. But again, I do want to talk to you all about this interest rate business, okay? Today's topic, again, it's twofold: interest rates, mortgage interest rates, and we're also going to talk about some tax forms that you'll need to know about, that you should know about. Interest rates. I get this question all of the time. Even when rates aren't doing this, I still get the questions. And the questions are, what are interest rates doing, Shirley? Are they really going up? Now, you ask that question because you've probably heard, you've watched the news, you've talked to neighbors, friends, or family. You've heard that interest rates are going up. So let's talk about this. Are interest rates going up? And I think the term going up is a little faux pas-ish, I don't know, because they're already going up. They've been going up. They're up, okay? But let's talk about that upness. Because again, for all of you all who don't know, I've been in this mortgage industry 28 years. Okay. I've been around for a long time. We're talking 28 plus years, right? And when I first started this business, when I first came in as a mortgage lender, a loan officer, we were selling interest rates in the double digits. Okay. Yeah. 10, 11%. So when someone says, are rates going up? I'm thinking, have you been around? Have you seen what interest rates have been doing over the course of these last 28 years? So the rates, in my opinion, are not up. They're probably right where they should be. However, last year, 2021, rates, you saw them in the 2% range. And everybody was like, they're great, 2%. Right. So 2%, I admit, it's the lowest rate I've seen in my business, in my career. It's the lowest rate I've ever sold in my career. So 2%, yeah, it was a great rate. But rates are still good, right? They're right now. And so let me stop myself because I really don't want to say what rates are because every rate does not pertain to every client, right? Sometimes you have to qualify for certain rates, right? Sometimes your credit score, your FICO score, your income, your loan to value is going to determine what that interest rate is. So I can tell you all day, oh yeah, rates are 2.79. But is that going to pertain to you specifically? Is it going to pertain to your credit score, your loan to value, the income that you have, your debt to income ratio? Is it going to pertain to you? So let's try to rework the question, so to speak, okay? And what do you mean by that, Shirley? Well, let me tell you. When I say let's kind of rework the question, instead of asking what the interest rate is, how's about ask what the cost is? Now, I know, no one likes to talk about the cost, right? And a lot of the clients all the time, well, I heard there's a no cost loan, Shirley. I heard there's a no fee transaction loan, Shirley. I heard that, some lenders don't have fees. Okay, well, let me tell you my let me tell you my background story on that part. Are there fees in a transaction? Well, let's see. You have a title person, you have an escrow person, and I'm talking for the West Coast states, okay? We're talking California, Nevada, we're talking the West Coast states. And East Coast is a whole different dynamic. They use attorneys to close their loans. They use closing agents and their fees are a little different, or they call them a little differently than what we do here in the West Coast. But I practice here in California and Nevada, so I'll tell you what the California and Nevada terms are. We have escrow officers, okay? We have title officers. We have appraisers. We have underwriters. We have processors. All of these people have to get paid. They don't go to work for free. Do you go to work for free? Okay? So when you hear a lender say, oh, and they'll advertise this all day. No cost, no fees, and that's why we get those questions, us mortgage brokers here. We get those questions. Do you have the no cost? Do you have the no fees? Well, let me tell you, title wants to get their money for doing their job. Escrow wants to get their money for doing their job. The appraisers want to show up at your house and appraise your home. They want to do their job and get compensated for it, right? So when it comes down to are there no fees, there are fees. There are. However, what some lenders do is they will give you an interest rate that corresponds to the no cost, no fees, right? So what do you mean, Charlie? Well, let's talk about it. Like I said, interest rates, they're not going up, they've gone up, okay? They've gone up, but that's not really the question. It's the cost that has gone up, okay? So let's kind of break this down a little bit further. So you call me, hey, Shirley, this is Michael. I want to get one of those no-cost loans. Okay, Michael. Do you want your interest rate to be 2.79 or do you want your interest rate to be 3.25? So how's that work, Shirley? Well, you said to me that you wanted a no-cost, no-fee loan, right, Michael? Yeah, I do. Okay, I'll just have to increase your rate. Because when you increase your rate, then that cost of the appraiser, escrow, title, processor, underwriter, all of those fees will be included in this rate. Well, why is that, Shirley? Because the cost of the rate, right? So when you have this 2.79 rate, you have a cost because the bank, the Federal Reserve Bank, charges the lender to get this money for your mortgage. And this money is not for free. So if you say to me, I want a 2.79 rate, no problem. You're going to end up paying points, money, costs to get this rate, right? You are. Because that's what's going to give you this lower rate from the Federal Reserve Bank, right? So if you want a 2.79, no problem. You have to pay the points to get it. And that's why I said the question of, well, are rates going up? They've gone up, but it's more the cost. So this 2.79, I'm just going to throw some numbers out here. Please don't quote me because this is not today's cost, okay? Again, this is not today's cost. I'm just giving you an example, showing you what kind of happens on the background, okay, on the backside. So you call me, Michael, I'll give you this 2.79 rate, no problem. But today it's going to cost you $12,000 in points. And that $12,000, for all of you who don't know, we typically roll that into the loan, okay? So your loan amount will go up $12,000 if you want this 2.79 rate, no problem. But then Michael says, well, but last year that 2.79 wasn't $12,000. You didn't tell me $12,000 last year, and I didn't. Because last year, instead of paying $12,000, you may have paid $4,000. You understand? So interest rates have not necessarily gone up. It's the cost to get this rate that has gone up. Last year, a 2.79, it may have been $4,500. I don't know. I can't remember. It was last year. We're in 2022 now. So in 2022, what would have cost, and these are just examples for the sake of the show. In 2021, that 2.79 really may have cost you $4,500. Your loan amount may have gone up $4,500. But in 2022, that same 2.79 rate is now $12,000. It's just that simple. So have rates gone up or have the costs gone up? So when you're talking to your lender or your broker, you might want to say, hey, how much is it going to cost me to get this rate? And like I said, now in 2022, things are a little different. They're just a tad bit different, but it's okay because again, coming from where I have been, 2.79 sure looks good to me. And whether or not it's $12,000 cost or not, that's up to you and your budget. Now, let's switch gears. I want to talk to you just a tad bit about closing costs and these tax forms, okay? Now, right now, it is tax season, and it is to your advantage when you see the mailman run, get the mail out the mailbox and open it up, okay? If you bought a house, refinanced a house, if you did any mortgage lending transaction last year, or if you had a mortgage and you have been paying your mortgage payments, then you need to make sure you're eyeballing the mail before you file your tax returns because you're going to get something that's called a 1099, okay? A 1099. Very important. Pull out the 1099, or some of you might be getting 1098s. Pull out these forms, guys. It's very important that you have these forms so that you'll know how much interest you're going to deduct. How much interest you're going to deduct on your tax form, okay? When you file your personal 1040s this year, and I believe the tax deadline has not been extended, so April 15th, when you file your 1040s, your personal tax returns, make sure you're itemizing what you can deduct, okay? Mortgage interest, huge. Make sure you're deducting your mortgage interest, okay? Don't forget. And you'll know it's your mortgage interest because when you get that form, it'll say in the box, and I forget what box it is. Let's call it box 5, 4. I don't know what box it is, but you'll see it and it'll say mortgage interest. It literally says that, mortgage interest. Make sure you're giving that to your tax person so that they can write off that deduction. Very important. You don't want to miss this, okay? And that's for the clients who have been paying mortgage payments, okay? Also, on that same document, you'll see in box 7. How do I know it's box 7? Because someone just asked me about this the other day. So in box 7, it'll actually say points, okay? So remember that 2.79 rate that you said you wanted, Michael? And I'm just making up a name, we're using Michael for this show. Remember that 2.79 that you said you wanted? And I said, in 2022, it's going to cost you $12,000. But in 2021, it was like $4,000 or $4,500. Those are your points, okay? That number that I told you that it costs to get to that rate, those are the points. That's what you want to use, and that's what you want to give to your tax accountant or whoever's doing your taxes. Now, I must put this disclaimer out there. I am not a tax accountant. Do not call me. Do not call me and ask me, did I do this right? Because I am not a tax accountant, okay? I don't do your taxes. However, I have some tax tips for you, okay? So give me a call if you want to talk about what maybe you could do on your taxes to help out when it comes to mortgage, interest, points. Call me. I'll try my best to help you. But again, I am not a tax accountant or a bookkeeper. You would definitely want to talk with the CPA or whoever has been doing your taxes. I'm just here giving you some tools and tips to let you know what you can deduct. Okay? So again, make sure you're looking at your mail. Now's the time to open your mail. If you haven't been opening your mail all year, now's a good time. If you did any type of mortgage lending or transactions, now is a good time to open up your mail because there's things that you can deduct once you get it and says mortgage interest and points. Okay, remember, since we were talking about the interest rates, I cannot stress to you, yes, rates have gone up, but it's the cost of these rates. And guess what? They're tax deductible. What'd you say, Shirley? They're tax deductible. Okay? The points are tax deductible, as well as the amount of interest you pay. So clients, please, all this worry and all this pomp and circumstance about, oh my gosh, interest rates, all of that worry, just think ahead. You can deduct that stuff next year when you're writing or when you're filing your 2022 tax returns. It's tax season now for the 2021 year. So you should be getting out your mortgage information and giving it to your tax accountant or CPA, right? It's that time of the season. But if you're doing any transactions right now in the month of January 2022, you can get yourself prepared in knowing that when you file those tax returns in 2023 for 2022, you'll have some deductions. You're going to get some money. Okay. So relax. Rates have gone up, but the cost is what's gone up. Okay. So all the questions, are rates going up? Are rates going up? They've gone up. End of story. Okay. But just know it's not always a bad or negative thing. Now, since we're on the tax season and tax year, tax time, let me say that, since it's tax season, I'm going to ask my producer to put on the screen next. I also want to talk to you about Schedule Cs, okay? Schedule Cs, right? And if you can't see it, give me a call. But this is just a blank form that you can file in your tax returns if you own a home, especially if you own your property, right? Use this Schedule C to your advantage. I'm only going to say this once because, again, I'm not a CPA. However, if you own your own home and you have not been filing a Schedule C, file one. Ask your tax accountant about it. Ask your CPA about it. File a Schedule C. Well, why would you do that, Shirley? If you own your own home and you're doing any business in your home, that's a tax break. It is. If you're doing any business in your home, use and file the Schedule C so that maybe you don't have to owe the government so much money. Maybe you can get a little bit of a refund back, and maybe, who knows, you might want to buy a house. You might need to use this Schedule C as a way to show extra income. I'm just saying. Call me and I'll talk to you about the tools and the tips that I know for those Schedule Cs. Call me. I'll give you my phone number at the end of the podcast, but I cannot stress it enough. We have a gazillion buyers out there that want to buy homes, right? First-time home buyers, investors, people that want to build up their real estate portfolio. We get all kinds of buyers that come through the door. And there are some buyers that sometimes may not qualify income-wise. If you watch my other episodes, and by the way, this is episode 17 of Mortgage Money with Shirley. If you watch my other episodes, and you can feel free, go to my YouTube channel, Shirley Nichols, and look at the other 16 episodes. I talk about co-borrowers and getting another person on your mortgage loan so that you can qualify income-wise. So again, those kinds of questions I've answered and I talked about before, and I'll just talk about real briefly now. If you need a co-borrower because maybe you're trying to qualify for a larger property or you're trying to refinance a loan amount that you couldn't do before, or whatever the case may be. Instead of getting yourself a co-borrower, again, if you're trying to refinance your property, perhaps use the Schedule C this year and get you some more income. Understand? If you're running a business or doing anything business related, hi, this is Shirley Nichols. Yes. Oh, you need some help with learning how to plug in your television? If you're answering any business calls, you get what I'm saying? If you're doing anything business related, I just took a phone call from someone who needed to know how to plug in their television. That's business, okay? You're going to take away my time. I'm going to give you a service. I'm going to show you how to plug in your TV. All that is business, right? You called, solicit, I answered, serviced. That's business, right? So use your Schedule C. And I know I'm giving you kind of like the elementary go around type of example, but again, use your home for the home business that it's intended for. File a Schedule C. It's just that simple. And especially if you're trying to buy a home or refinance a home. And even if you're trying to buy a home, again, guys, if you have to get a co-borrower, get a co-borrower, but let's talk about it, okay? But I mentioned this Schedule C because all too often I see homeowners who haven't filed a Schedule C, and there's nothing wrong with filing a Schedule C, I assure you. Okay? It's a means to an ends, if you will, right? The IRS wants their money. Don't you want your money? If you have to pay, here's a way to not pay as much. You understand what I'm saying? Talk to your CPA about it, and they'll advise you from there. Or again, I'll give you my phone number after the show, and we can talk a little bit more about the Schedule C. Now, I'm also going to bring up the Schedule E, and I'm going to ask my nifty, lovely producer to show you guys that Schedule E on the screen. Now, these are all, again, tax forms that are a part of your 1040 personal tax returns. That's Schedule E. Okay. Believe it or not, I have oodles and oodles of clients who don't file a Schedule E and they own other properties. If you own other properties and you are collecting rental income, do yourself a favor and file your Schedule E. Okay? That Schedule E is a very nifty tool for those of you who own other properties. Okay? It's a nifty tool because, again, that income, you want to claim it. Well, why do you want to claim the income, Shirley? You want to claim it so that when it's time to qualify for that mortgage loan, then the underwriter can say, oh, I see here you've had rental income. Oh, we can use this rental income to offset that mortgage payment that shows up on your credit report because you have these investment properties, these other properties, these rental properties. All of these mortgages show up on the credit report. So if you're trying to qualify for another home loan, you gotta show rental income, right? But Shirley, I don't want to show the rental income because then the IRS will be in my business. They'll have my monies and they'll want to tax me on their monies. Listen, if you're making a mortgage payment other than the primary mortgage on your credit report and you're trying to build your real estate portfolio, you got to show the rental income. Unfortunately, the underwriters are done with the poof. There's rental income, poof. There's rental income, poof. Let me grab it out the air. They're done with that. They want to see it in writing. They want to see it on your tax returns. So make sure, guys, we've talked about this Schedule E. We talked about this Schedule C. Make sure you're filing these on your 1040s. Do yourself a favor. It's extra income. It's extra income. And yes, you can deduct it. Yeah, because remember, we're looking for the keyword mortgage interest. You can deduct these things on your tax returns to help you qualify. Yeah, but the underwriter is not going to give you credit for rental income because you own this other property, but you haven't claimed the rental income. They're not going to just poof, give you rental income to help you qualify. You got to show them. So make sure in this season that if you're doing your tax returns, if you haven't filed them yet, give me a call. We'll talk about the Schedule C, which is self-employment income. But again, it's a tool to help you qualify where you may not have qualified before. I don't know. I'm just saying. Okay. These are tools and tips that could possibly help you in your mortgage endeavors. Okay. It's tax season. It's not too late. You got to April 15th. So stop before you file your tax returns. And if you're thinking that I might want to buy a piece of property, I want to add to my real estate portfolio, I want to simply be a first-time home buyer, you want to do some things this year towards mortgages or purchasing property, call me before, what'd you say, Shirley? Before you file your tax returns, okay? I have some tips and tools that could possibly help you get qualified. But you got to call me before you file the tax returns because then all of a sudden you file the tax return. Now we got to do an amendment. You don't want to kind of get into those kinds of things. But those were the things I wanted to bring to your attention. And I'll talk a little bit more further in detail again. If you give me a call, okay, I'll talk a little further in detail about these specific Schedule C's and E's, okay? And then especially if you're self-employed, let me sit up. If you're self-employed and you're getting ready to file your tax returns, again, most of the time what comes across my desk is the Schedule C. for self-employed people. They're still filing their 1040s, but a lot of the times in those 1040s, they'll also have their Schedule C. Schedule C. I can't quit talking about this enough. Okay. But a lot of the times, that's what you'll see in a person's 1040s, their personal tax returns, if they're self-employed and it's a small business. Every now and again, we'll get some corporate tax returns. Yeah, some S Corp, sole proprietor. We'll get all of those tax returns. But the main thing is, if you are self-employed and it's a smaller scale business, you can just file a Schedule C, You can on your 1040s. Or you can file some corporate returns. It's up to you. But what I am saying is, before you file them and you think you want to purchase a property or you think you want to refinance in the year 2022, call me before you file. Okay? Make sense? All right. So again, interest rates, stop your worries. Okay? Because these are tax deductions the following year. The points, the interest that you paid, all of that stuff is tax deductible when you file your 2022s and 2023. Okay? So don't worry. Don't worry, okay? Give me a call. There's still lots and lots of opportunities out there to buy homes. I'm also a real estate broker, and I'll talk to you in a future podcast about being a real estate broker and how we're buying and selling and helping people get into new homes and all that good stuff. It's like a one-stop shop around here, We do the mortgages, we do the sale of your home or help you get into a home. We're a one-stop shop with Clear Sky Mortgage and Realty. We are. But my job here as your podcaster, Shirley Nichols, Mortgage Money with Shirley, I want to make sure I'm trying to keep you abreast of what's going on in the mortgage business. Now, another tip, if you are purchasing a home, I work with lenders because I am a mortgage broker. I work with lenders now who are giving appraisal credits up to $600. What'd you say, Shirley? Yes, I have a lender. If you're buying a house, okay, this is not for the refinancers. And by the way, most of my refinance clients, if you're not pulling out cash, your appraisal is waived anyways. So refinancers, don't worry. You still have a shot at not having to pay for an appraisal. But purchase, if you're buying your first home or if you're buying another property, guess what? I work with a lender that is giving you appraisal credit up to $600. That means when you buy a house, you typically have to do an appraisal, which you should be doing. Shy away from the broker or the loan officer that tells you, don't worry, you don't have to do an appraisal. Get an appraisal. Get an appraisal and an inspection. If you're buying a new home, it's kind of like buying a car. You want to know the value of the car. If you're buying a used car, you want an inspection. You want to make sure that the car is running properly. So same thing with the house. If you're buying an existing house, then you want to make sure you're doing an inspection, okay? An inspection is separate from the appraisal. The inspection is going to inspect it. They're going to tell you visually what they see and what's wrong in the crevices and the cracks, right? That's what your inspection is going to do. Your appraisal is going to appraise the property. They're going to give you the value of that property. So get one, okay? Again, my strongest advice, if you have a loan officer or a mortgage broker who's going, oh no, you don't need an appraisal, run, okay? Put your sneakers on, put your high heels on, and run away from that lender or that broker, because get yourself an appraisal, especially if you're buying an existing property and especially if you're buying a new property. Get yourself an appraisal. But what I am saying is, right now, up until I think it's mid-March, I forget the exact date, but it's mid-March, I have a lender that will give you an appraisal credit up to $600. And all of you who have bought properties before or refinanced properties that had to pay for an appraisal, you know that is huge, because those appraisers, that appraisal fee is paid up front out of your pocket. Out of your pocket, okay? That $600 is typically paid out of your pocket. Now, the average appraisal, depending on the size of the property, about $550 to $650, okay? So out of your pocket, $550 to $600 is what comes out of your pocket, whether or not you buy the property, right? Part of the lending process is once you get your offer accepted, we take off down the road, down the freeway into the underwriter's office, and they start processing your file. And upon approval, you have to have an appraisal. Okay. So a lot of the times, unless you're refinancing where there's a lot of appraisal wavering stuff going on right now, if you're buying a property, just know before your house or your loan is approved, you got to do the appraisal. Okay. And if you pay for that appraisal, $550, $600, and all of a sudden you thought the house that you were buying with that $700,000 price tag, if their appraised value only comes in for $650,000, you got to know that, right? So you've just spent $550 to $600, $650 on an appraisal that you're not even going to buy this house because it's not even worth it. So you just wasted your money, right? So make sure that I am working with the lender, first of all, that you put that in your head. I'm a mortgage broker that's working with the lender that is offering up to $600 of appraisal credit through mid-March. I forget the date. I can give you the date later if you call me, but it's through mid-March if you're buying a property. Again, refinancers, don't worry about it. We got something else for you. If you're buying a property, I'm working with the lender. I'm telling you this right now. Again, my job to bring to you the news and the updates in this mortgage and real estate industry. Okay? So right now, January 28th through mid-March 2022, I have a lender who is offering up to $600 in appraisal credit so that you, my friend, will not have to pay for your appraisal. Okay? All right. So again, I'm your girl, your host, Shirley Nichols, bringing to you this podcast. I'm on every first and third Fridays of the month. First and third Fridays of the month. If you felt this was helpful, please share, invite, ask your friends and family and coworkers and relatives, ask them to watch the replay and subscribe to my YouTube channel, Shirley Nichols, okay? Subscribe to my YouTube channel, Shirley Nichols, and you can see all 17, this is episode 17 today, you can see all 17 episodes on my YouTube channel, or you can spend time scrolling back through my personal Facebook page, Shirley Nichols, or my Facebook business page, Clear Sky Mortgage and Realty. And I'm starting my Instagram page, Mortgage Money with Shirley, okay? So again, guys, I thank you so much for tuning in today. I love, in case you didn't know, I love this business. And I've been in the industry for over 28 years and I love it. So again, my job to educate you, bring you some tips and tools that you can use. And if you still have questions, comments, or concerns, you can hit me in my direct messenger or DM, or you can call me at 818-720-7575. 818-720-7575. And again, my Mortgage Money with Shirley podcast airing live every first and third Fridays at 9:30 Pacific Standard Time. That's California West Coast time, 9:30 a.m. every first and third Friday of the month. You'll see Mortgage Money with Shirley. I hope you all have a great, fantastic weekend. Take care, and I'll see you on the next Friday. Bye.